Changing trends affecting the North American warehousing and distribution market. The North American warehousing and distribution market is recovering nicely from the 2009 economic downturn. Although a good bit of space is still available in the market, customers have been able to take advantage of low rates and trade up to larger facilities in key locations throughout the region. However, just like the economy, demand for warehousing and distribution facilities remains uneven across the region as shifting trends such as the rise of e-commerce, changing transportation patterns, and shifts in trade patterns are affecting the demand. Transport Intelligence's latest report, North American Warehousing and Distribution Market, provides an overview of the market, growth spots, and major trends affecting the market. An overview of the top 10 trends affecting the North American warehousing and distribution market is provided in this webcast. Demand for larger facilities is on the rise. In 2011, larger facilities, or those termed Class A, represented 20% of total industrial inventory and 50% of demand. Many companies were able to take advantage of lower rates and trade up to these types of facilities. As a result, there is now a shortage of Class A facilities. Not only are larger facilities in demand, but a growing demand for green facilities are on the rise. Varying reasons exist for this trend, from "it's the right thing to do" to another way in which to reduce cost. Rise in oil prices has resulted in companies to rethink their warehousing distribution facility strategy. Freight transportation accounts for the majority of logistics, in some cases over 50% of total logistics costs. This has prompted some industry analysts to forecast an increase in facilities in order to reduce distances to customer destinations. However, Transport Intelligence expects a more strategic, regionalized approach towards placement of such facilities. Increasing inventory levels is not only another result of rising oil prices and transportation costs, but also as a defense against unforeseen supply chain disruptions such as natural disasters. Perhaps one of the most interesting trends affecting the warehousing and distribution market is that of the growth of e-commerce. According to Forrester Research, U.S. e-retail sales is expected to grow 10% a year to $279 billion by 2015, and will account for 11% of all retail sales. To support this growth, many brick-and-mortar retailers are expanding their distribution facilities, while many are establishing separate facilities to support this trend. Changing trade patterns is also another key trend in considering locations for warehousing and distribution facilities. The widening of the Panama Canal has resulted in much speculation of its effects on the U.S. East Coast versus the West Coast, as many ports race to deepen their harbors for the allowance of larger ships. Trade with South America is on the increase thanks in part to U.S. trade agreements with the region. Miami, long known as the U.S. gateway for South American goods, is now being challenged by other locations such as Houston and Atlanta. A shift towards regional supply chains, or nearshoring, is resulting in manufacturing moving closer to customer bases. Rising costs such as oil prices and labor costs are being attributed to this shift. Also, risk management, a shorter supply chain, i.e. lower transportation cost and quicker time to market, are other reasons for the move towards regional supply chains. Mexico has become the recipient of a good bit of this trend. Japanese manufacturers, such as Toyota, Honda, and Nissan, have all made major investments in Mexico due to rising costs in Japan and increasing demand for automobiles in the U.S. Containerized imports have long been a growth indicator for the warehousing and distribution market. Over the past 10 years, California's Inland Empire, close to the ports of Los Angeles and Long Beach, grew to become one of the largest concentrations of warehousing and distribution facilities in the U.S. However, investment surrounding ports such as Canada's Prince Rupert and Mexico's port of Lázaro Cárdenas will prove to be alternative locations for imports, particularly as the growth of intermodal continues to increase. According to the Intermodal Association of North America, growth in intermodal increased almost 5% in 2011. Intermodal hubs across the North American region are attracting logistics parks and warehousing and distribution facilities. For more information on this report or on other products and services from Transport Intelligence, please give us a call. Thank you.